Hi guys, thank you so much for joining me in another video. My name is Fifi and this is my journey to financial freedom. Today I want to talk about something that is quite confusing to a lot of people when they begin their investment journey, and for me it was also quite confusing. So it's about the difference between investing in indexes or individual stocks or even mutual funds. What's the difference and how do you pick what is right for you? So hopefully this video will cover what the differences are and how you can decide what to pick and how to invest and what is right for you. So let's get right into it. Firstly, I think it's quite important to start off talking about saving. Saving to me does not equal investing. So I think with me investing means growing my money so that it can provide me with an income in the future and so that my money is working for me. Saving doesn't do that. Saving only allows me to invest. So at the end of the month, when I look at my bank balance, I see how much cash I've got left over. That's not the point when I invest. I decide at the beginning of each month how much I'm going to put aside and make the rest work according to my budget. So a lot of people just typically put their money into a saving account, which gives you like maybe an interest rate of less than 2% if you're lucky. But when you're looking at inflation at the moment, it's hovering around 1.5%. So saving actually costs money, and its value, its value is going to decline over time if you're not careful, if you don't invest. That doesn't mean don't save. Conventional wisdom, like I mentioned before through my research, dictates that you should try and save between 3 and 6 months of what your expenses might be in the future or even in the present, so that all of a sudden if you lose your job tomorrow you are able to cover those expenses. And 3 months and 6 months, there's a big difference between the two. For me, I kind of decide how much it needs to be depending on how long I think it will take me to find another job. Say, if you lost your job tomorrow, how long do you think, if it wasn't for these particular circumstances, how long do you think typically it would take before you apply for a job, find a job, start work? So you just need to make sure that you have that much cash in your account in order to cover you while you're off work for that short period. My husband always jokes about the fact that he will just Uber in case he was in that situation. I say jokes, but I think he is actually quite serious. I don't know why he has this fantasy of Ubering. Like, he always fantasizes about if he was an Uber driver and how cool it would be and all of this stuff. I'm sure it is cool. I've met some really cool Uber drivers who have various different things going on in their life and lots of different side hustles. I'm not saying become an Uber driver. I'm not promoting Uber. I'm not doing none of that. I'm just saying if you're going to think about side hustles or whatever to generate more cash. By the by, so like I said, the point of this video is to decide what exactly we want to invest in and how we decide what we will invest in. Let's just jump straight into it then. What is this hair even? Guys, since I gave birth to my babies, I had a period of really bad hair fall, which happens after you have a baby and your hormones go back to normal, because in pregnancy you get this amazing hair and you're like, yeah, great thick hair, and then 3 months or 4 months after your baby's born, it all sheds because all the hair that was supposed to fall out while you're pregnant suddenly all falls out in one go. And then after those 4 months, all of a sudden your hair starts to grow back again, and now I've got this like weird hairline which has like little baby hairs here at the front. By the by, who cares, let's just brush it back and have a big forehead. First type of investment I want to talk about is index tracker funds, and these are great. They generally track how the market is doing according to a particular set of companies. So you have the FTSE 100, which are the top 100 companies in the UK, and similarly in the US you have the S&P 500, and these are the top 500 companies in the US. So your investment will perform depending on how these companies generally perform and what the influence is in the market. You could pick your own allocation across various indices, and I used to do that, but then I decided actually life's too short. So I generally put my investments into 100% equities, and some people might question this, so you might want to have a different option, but for me, my investment horizon is quite long, so I'm looking at a 15 to 20 year investment horizon, and for me 100% equity seems to work. If you want your money back sooner, say in 5 or 10 years, you might want to split your allocations across having more bonds in your selection, or just splitting 50-50 between the two, having 50% equities and 50% bonds when you pick your tracker funds. The second type of investment is mutual funds, and they are slightly more different in their objective, in that they are a little bit broader than pure index tracking. For example, they're typically run by fund managers, and these fund managers implement strategies that are market beating, and so always aim to perform a little bit better than the FTSE. So they may try different techniques, pick their funds using different strategies, different filters, in order to beat the market. And yes, the returns might be much better. They do sound super great in that they will perform generally better in the long run, but they are slightly more expensive, so you do have to think about it a little bit twice. For me, I'd like to keep things simple, so for me, I just stick to my indexes. The third type of investment is individual stocks. So generally, when I've spoken to people that are not too familiar with investing and you talk about investing, what immediately jumps out is, hey, okay, great, can I invest in XYZ company? Can I invest in Vodafone? Can I invest in Apple? Should I invest in Google? Because they automatically assume that these individual companies are performing great, and there's a sudden boom, they're going to make lots of money or what have you. Can I invest in, say, the most popular bread making company? I don't know, but that's the first thing that jumps out to novice investors in terms of what they think investing in the stock market is. And I'm a little bit guilty of that as well, because before I used to think, oh, investing just means picking some companies and buying stocks of these companies and just seeing how they do, and you're trying to chance it a little bit, and that's not the case. And this is the most riskiest type of investment, when you're trying to select individual stocks. And there's nothing wrong with selecting individual stocks. The more you select individual stocks and the broader your selection is, the closer you are actually to an index fund, because remember, like, the index fund has the top companies which are across various sectors already, and it's already diversified, whereas when you're trying to pick your individual stocks, you have to almost manually diversify your portfolio. So unless you are familiar with what you're actually looking for, you have a set of rules in place, you know exactly, you've done your research into picking these particular companies, and you've looked at the various parameters and factors, and you've reviewed maybe their annual reports, and looked at various different performance criteria, I wouldn't say that would be the first thing that you should invest in as a novice investor. Generally, if you do go down this route, be educated and know what you want your portfolio to do. Remember that if you do pick individual stocks, you're actually chancing your portfolio a little bit. Yes, they may be, dividend producing, so you may get your passive income. Yes, that, you're hoping that you've picked a selection of companies that are underperforming right now, but will actually, do really well in a few years' time. But that's the point, right? You're actually chancing that. Unless you've done your research, unless you've got a set of rules, don't do that. But I will be talking about my selection of stocks as well, because I do hold a small portfolio. I currently hold 30 stocks, and I've got a set of rules. If anyone is interested, I will talk about those in another video, and I'll talk you through how I pick those individual stocks. But my portfolio is made up of 10 great companies that are large cap, 10 mid caps that I feel will turn a corner, and 10 small caps which I feel will grow beyond market returns anyway. And then typically I don't touch this selection of 30 for an entire year, and the whole year I spend researching, thinking about what strategies I might want to implement when it's time for my review, and then maybe I'll hold, I'll change, I'll sell, and I decide at the end of each year what I want to do with that particular holding. And that's just what I've made up myself. That's a strategy I made up myself through my research and through my reading. And it's different for everybody. So actually, it would be a good thing. Why don't you guys share what your strategies? Well, if you don't want to share your secrets, that's fine. But this channel, I'll be telling you exactly what I'm doing. But tell me, do you guys hold your stocks for 1 year? Do you hold them for, do you change them? Do you review them? What do you do? Hold? Do you hold, sell, change? How often? When? I don't know. Just tell me. Right, to wrap this up then, what I would say is beginners, definitely try and stick to index funds. Try and avoid individual stocks if you haven't done your research. Because it does take balls of steel, especially when you've got a recession on your hands and you're going through a global pandemic, to hold these stocks and hold your breath while the market recovers. But luckily I don't have balls, so that's okay. And hopefully, well, I think I should end it there right now because this isn't, yeah, anyway. Guys, please like, comment, subscribe if you like what you're seeing. But until next time, cheers, bye.